friends, welcome back. It's been a little bit since we've looked at EGLD, but we have quite a lot to look at on the charts. I mean, it's not been a great couple of years. What can we say? The bull market had pretty much a blow off top, and after the launch of the DEX, the price has been in a steady decline throughout one of the worst bear markets in history, and all of DeFi has really been hit hard. EGLD is not the only asset that has fallen victim to this type of price action. This happens, and we've seen it happen in multiple years before as projects try to gain steam and gain a new market share. So the question really is, what are the charts showing us? What can we expect? Now, you know how it works. Subscribers on Twitter, you are going to get this full video right off the bat. You're going to be the first ones to see it. If you're watching this as a regular Twitter follower, you're going to see a little bit of the video, and then it's going to cut off, and you'll have to subscribe to see the rest, or you can wait anywhere from 3 to 5 days to see it on YouTube once I upload it there. That's pretty much it. And we're going to go ahead and get started. Make sure you subscribe on Twitter and make sure you follow everywhere. Twitter, YouTube, all that stuff. Let's get going. It's time to get into this. Alrighty. And here we are, the EGLD chart. We haven't looked at it in a while. I'm going to start off at the hourly, and we're just going to see what's been going on short term. Well, we have this purple zone below us, and we've basically been hovering on top of this zone in a descending bearish pattern, kind of working on the top and hoping to get support. And now with this drop that the entire market has seen, we've seen us fall below this support area. We haven't been below this area since about March 13th-ish, around that time, March 12th. Once we broke out of this $40 level, we haven't really been back down below into the ultra pain support. We are in it now. So first thing that we can see is in this area, we have support at around $37 to $38. So that's going to be the key area that you're looking at for short-term support, right? And then what you see below is that we have that $35 mark right at this purple zone below us. On top of us, we have resistance waiting for us at 55, but we got to get there to actually see it. So let's zoom out a little bit now and see what's going on the other time frames. We're going to take a pretty deep look at EGLD today, so I hope you enjoy this video. It's been a while since I've really dove into it, so even I needed this, TA. So basically here, we're looking at around $44 as a median point for the last 8 months or so, where we really have a good amount of resistance ahead of us. So that's sitting right at around $44. We need to break that $44 level, and we need to flip it into support. I mean, you can clearly see the amount of volume that's been put in this generalized area. Now, below us at around 33, 35, we don't have a ton at this time frame, and this is already a really big time frame. First thing that we see on the 4-hour that's really, really key, we got to zoom in to where we are now, is that we are starting to hit the oversold levels. Now, don't get too excited about that, because you'll see here back in March, we went much more oversold than we are now. And if we were to have that same level of a drop from where we dropped before, which was around $41, we dropped all the way to 36. Well, if we're going to have that drop here and we have a similar drop to before, well, we're looking at hitting that $35 mark this time. We're looking to actually set a lower low if we have a similar drop to before. So this really occurred with a market drop. So that means if you see Bitcoin start crashing a little bit down to 26, 25, which you know from yesterday's video is very possible, then EGLD could potentially hit at $35. For my subscribers, you know that I've been picking up a little bit of EGLD because I like this area. I like this ultra pain support area for accumulation. Now, that doesn't mean this is as low as we're going to go, but we're going to take a look at what might be happening in a little bit longer of a time frame. The red line, that's our 200 exponential. When we were up above it during the bull cycle, very bullish, right? This was back in 2021. And then during that massive 2021 move up to the 500 level, we were well above it. Well, ever since we started dropping and we dropped below the 200 level, we have basically been just so far away from that 200 exponential. Now, we came down and we touched it once. This was a good sign. This was in February of 2023, only 2 months ago. Now, the reason this was so critical is when we touched this 200 exponential moving average, and we hadn't done that since 200, it started to tell me, okay, we may be hitting a bottom here. The moving averages are starting to get constricted, and I'm starting to see that price is reaching that constricted point too, right? This is slowly starting to level out. And what I want to see is, I want to see the moving average start getting really constricted and the price start moving above these moving averages. So the real key then on the daily is that we start having some daily closes up above the $42 level, which is right here. this is where we need to start closing daily. We start closing above this level. Well, then what's going to happen is we're eventually going to reach a point where the 200 exponential is going to come like that. These moving averages are going to go like this, and the price is going to get so constricted, and then we're going to see a breakout. Now, for this to happen on the time frame that we're on, I mean, you can kind of see just with this rudimentary drawing, it's putting us somewhere into the June area. So we have another month until we would even get to the point where the moving average starts hitting that level. Now, what does that mean for right now? Well, a couple of things we have to look at right now, all right? The first thing I want to show you is something that most people are probably not going to like to see, but we got to take a look at it, all right? We can see right now we are in a very, very clear descending channel. That's what's going on. EGLD has been plagued by this descending channel for some time. This descending channel has been here since last May. This has been an entire year that we started working in this channel. And you'll see here at the bottom, I have this red dashed line. This line is basically showing us where we've hit like our maximum pain bottoms, right? We hit it at $32 here. We hit it here at around at $41. In reality, this was even $38. And well, as long as we continue following that channel, that really means that we could hit another bottom on this dotted line if we take another massive drop in the market. So that's telling me that even though $35 is this area here is really where I'm trying to buy, this is my ultra pain support, it's not really ultra pain anymore. It's starting to get normalized. Everyone's kind of getting used to $35 to $40, which is not really good, but it makes sense with where the DeFi market is right now. But anyways, what we're seeing here with this area of 35 to 40 is, yes, it's a support zone. Yes, it is, definitely. But a market drop that's significant, just like it did last December, could take us below. And if it does take us below, well, then we're looking to hit somewhere around the $25 to $27 mark as a bottom if that happens somewhere in the next month, if we have a massive drop. Now, what does that mean? Well, it means that your boy is going to have some orders sitting at around 35. I'm also going to have some orders sitting like around this $33 mark, which is right at the bottom of the descending channel. And then kind of anywhere between this, 27 to or $25 to $32 area is not a bad area to have some DCA orders, right? If you're planning to DCA in over the course of the next few months, this would be a good area to DCA in. It might even be a good area to put in some long positions, right? If the price comes down here rather quickly, well, putting in a long position at around $27 or $28 with a stop loss may not be a bad idea. That might be a pretty good way to make a quick gain if we drop down this level. We really don't know. It depends how the market moves right now. And unfortunately, sentiment is really bearish with the SEC in the United States really throwing curveballs and Gary Gensler being very, very bearish towards DeFi. It's why a few months ago, I think maybe 6 to 8 months ago, actually, I told all of you that I've reduce the amount of EGLD, Ethereum, ADA, and everything that I'm accumulating long-term. I'm still buying everything and doing short-term trades to make gains, but I'm not adding a ton to my HODL stack, not as much as I used to. I'm HODLing a lot more Bitcoin, and that's because of what I see here. I see a lot of risk coming from the SEC, and until on the charts, I see something more bullish, which means we have to see some bullish stuff from the SEC. We have to see some bullish stuff from the Fed and how they're going to do monetary policy. We have to see overall markets start picking up. Bitcoin has to start really past the golden pocket. And at the same time, we need DeFi to start picking up and retail to start coming back in. And then what's really key is that MultiversX adopts users at the right time. So we need to see a push from the community to bring people in and to teach them how to use the platform. I want to see the platform get easier for everyone to use. I want to see more content coming out from a lot of different people. I also want to see a lot of marketing efforts coming from the team to bring people on board and to really take this to the next scale, right? I think the Elrond asset, to me, or the MultiversX asset, still holds a lot of value. And it's because of the underlying blockchain, right? I've been a proponent of it since the beginning because of the technology. But the problem with technology over all this time is that other competitors are starting to catch up. And when that happens, you unfortunately start having a less of a standard deviation between yourself and the competitors, right? Now, MultiversX isn't quite there yet. Adaptive state sharding is still where other blockchains are trying to get, right? But there are blockchains now that are capable of doing similar types of feats in terms of their infrastructure. So that means that MultiversX really has to capitalize on the user base that it has already within it. I mean, you have 16 million EGLD or something being staked, right? You have a massive amount being staked. You have a lot of people that are very much into the DEX and that are into how things are working and locking in their value. Not a bad thing if you're here for the long term. Step number one, mitigate risk. You can be as bullish as you want on the asset, but that doesn't mean you don't mitigate risk. You always do your risk management, because you know what? You could do very well somewhere else and then buy a lot more MultiversX right before it starts jumping, right? You don't necessarily have to buy it all at $28, $35. You make gains with Bitcoin, you make gains somewhere else. You buy at $50, you could still end up with the same amount of EGLD with much less stress throughout the time and much less risk, because you don't know how it's going to perform unless all these things go right. So keep that in mind, right? I'm bullish long term, but I'm realistic short term. That's really the good way to be. So now you know what I'm looking at as far as targets, right? Now, what do we want to see? Well, obviously what you want to see is you want to see us going above this descending channel, right? We really want to jump above the descending channel, get above this yellow line at around 46. So we have a couple of key areas to beat, right? We really want to break past the $42 to $44 level, which is where we have all of this resistance right here, right? All this volume resistance. Then you want to go into you want to hit this 200 exponential moving average. Now, this is on the daily chart, all right? The 200 exponential on the daily is now at $50, right around 48. So breaking 42 and then breaking 50 are the key areas we have to, but there's so much resistance, and look what that does. If we move up and get resistance there and come back, it takes us right back to where we are now, and it fits perfectly with this descending channel. So that tells you much more likely that we are going to hit resistance there. But if we have a boom, if there's something that triggers a boom within this asset, well, then what I'm really looking for is for us to come up and flip this $42 to $43 level into support. Now, when that happens and we start breaking this descending channel, that's probably when I'll start accumulating a bit more. But I'm going to want to see some confirmation of it. It may not happen yet, right? The descending channel could keep going. We could keep going like this, right? Trading in this $30 to $40 area for quite a while. And then we could see us break past that descending channel in September. Like, who knows? Who knows when all the markets are going to turn? All I know is that I'm watching these levels for now, and I'm going to take my time accumulating, because there's nothing to guarantee to me that I'm going to see a big move up until the rest of the market starts moving, or until there's some massive news coming for this asset. Okay, so overall, my thing with EGLD is be realistic, right? I'm trying to get what I can, but I also have to keep in mind that the SEC can throw curveballs in there, and if they do, well, I want to have cash on the sidelines to pick it up later at a better price, right? If I can get more EGLD at $25, I'm going to do it. But I don't want to do it too early, so I'm just going to wait and not make too many moves. But I am accumulating. Yesterday, I picked some up. I picked some up last week, so I am still accumulating, just not as high. Okay, this is on Masari. If you look at real volume here, you'll see a massive drop in volume over the last year. We go to all time, and you can really see during those peaks of the bull market how much volume we had compared to now, right? Volume has really, really leveled out, and this is happening across the board with DeFi, but particularly hard here with Elrond. Now, if we take a look at the circulating supply, you see another reason why the price is not doing very well, because throughout this time, inflation has still been occurring. Now, inflation with EGLD is not massive, but it's enough at this point when you don't have volume. The inflation happening with the asset is going to affect price. It's just more supply coming in when there's less real volume means that you're going to see a lot of information telling you that things are moving to the downside. And that's kind of what we're seeing, right? We're seeing from all-time highs, we're down 92%, right? From the cycle low, we're up 44. So that's not bad if you're buying at the cycle low, but still a 92% drop from all-time highs is pretty massive. And we're seeing that with a lot of assets. So keep it in mind, it's not the only one affected, but it either is putting you in a position where you are able to buy at a really good price, or you have to really mitigate your risk. Anyways, this is everything for today. No, it's not the most bullish thing that you can ask for, but this is realistic, right? You gotta stay realistic with everything that you're doing, right? Right now, I've given you the things to look out for. We're gonna keep doing this, but it's not gonna be as in-depth. The reason I wanted to go more in-depth today is because we haven't done this in a while. So now you have the full picture of what I'm looking at for EGLD and what I'm really looking forward to for a reversal, what I need to see in order to see that reversal. Once we see that, I'll let you guys know. If you have any questions, hit me up. If you see anything on the charts that I didn't call out, let me know. Otherwise, we'll see you again next week, and we'll look at this a little bit more. Thank you again. I appreciate you. If you're watching this, that means you are likely subscribing on Twitter, so thank you for subscribing. If you're seeing it on YouTube, well, you could have seen it about a week earlier. Just make sure you go onto Twitter, follow me, and subscribe. $4.99 a month, but you're going to get a lot of information about trades I'm doing. You're going to be first in line for new video content that's coming out, all these things. And now, one thing I want to let everybody know, next month I'm going to be traveling for about a month. I'll be going to a few different places. During that time, I'm still going to have access to my phone. I'll still be posting content. I'll still be doing trades and stuff. So you'll get all that information as much as possible. Videos will be a little lacking between like mid-May to the end of May. And then in June, we'll be starting right back up again. So keep that in mind, but I'll still be giving you as much content and feedback as I can during my travel time. All right. Anyways, I'll see you guys again soon. Have a great day. Peace out.